It appears Facebook has silenced its critics. It's seeing a 25% spike now in its share price, trading at around $33.15, and that on the back of robust second quarter earnings out yesterday. The social network attributes the performance to a 76% rise in mobile advertising revenue, that to $656 million. Let's look at all of this and other tech stocks which have been in focus. Apple and Netflix. We're joined by Alexandra Nasovskoy, analyst at Saxo Capital Markets. Thanks for joining us again, Alex. So let's get into Facebook right now. We're seeing a buying frenzy on Wall Street and everyone's buying into this mobile advertising story. Break it down for us in terms of what they've done there and why it's so exciting.
So it's actually pretty exciting because, once again, nobody expected the revenues to increase as far as they did. But Facebook has made a very calculated bet on mobile, as you've mentioned. So what they did is they put an immense amount of money into the mobile space on the side of advertisers and on the side of consumers as well. So they've released Facebook Home, which is a completely unique platform for mobile, specifically for Facebook. They've also simplified the interface for advertisers. I think they reduced the amount of modules for advertising tools and made them much simpler. But the third thing is, which not many people mention, is that advertising budgets are extremely tight. And so when an advertisers look, they say, okay, we can get one ad in a magazine for a day, or we can invest this amount of money and get access to an immense amount of clicks on Facebook. And they want to get access to mobile, and Facebook is the only one that's really doing that right now.
So Facebook almost has a monopoly in this space, if we could call it that. Yeah. But are consumers going to, at some point in time, break? I mean, we all use Facebook. I'm one of the, how many people log on a day? 700 million people log on to Facebook a day. But at some point in time, it's going to frustrate you or not. I mean, what's your assessment of that?
You make a good point. I think, honestly, consumers, at least they can tolerate the advertising for now, and Facebook's getting a lot more aggressive, which is why increased revenues, especially with the advertising. And I have a feeling that if it gets any worse and even a half-decent competitor comes out, you'll see a lot of people jumping ship. So I think it's a little too early to tell. One other thing to mention is that these earnings, we have to be very cautious about them because this is kind of a leading indicator, but it doesn't indicate how the users are going to take this. So right now, the price is only reflecting the sentiment of investors and the sentiment of advertisers, hence the revenues. But we're not paying attention to
the clients.
The clients, right? Yeah. The most important part. So if the clients don't like it, there might be some serious backlash.
But what else does Facebook have? I mean, what is the next growth option right now? What are the other? I mean, surely Zuckerberg and the team right now are also aware of that key point.
Well, as we've said, they're targeting mobile quite heavily. They bought Instagram. They've released an Instagram competitor. They released a video competitor for Vine. And it's actually a pretty exciting space. Instagram's not really been monetized from the advertising side, so we'll probably see advertising in that area as well.
Where's the advertising going to come on Instagram? I'm just wondering.
I can only imagine they'll just start adding pictures of their own and with these nice filters.
There we go. Okay, let's talk about this in terms of what it means for the tech sector right now. Facebook, what type of feed-through that is having to the tech sector, and of course we are seeing buying once again, and we've seen a bit of a mixed picture this quarter.
It's certainly good. There's been a couple of really good returns from Apple, from Netflix. Netflix is actually pretty exciting because they're starting to get completely exclusive content, and the House of Cards got a lot of nice response from the Academy. But at the end of the day, companies like Facebook and hopefully others like them who will report their earnings this quarter, we'll see some good and positive results. It's very good for the tech sector, very good for the US economy, but we still have to be very cautious and not go into a buying frenzy.
Going back to Facebook, because I mean the stock is now trading at $33.15. We know it IPO'd was at $38, so it's not far off from that level, even though so we're seeing some buying back into the stock. Is that IPO and all the controversy behind the company now, and certainly one could classify it as a botched IPO?
I think the investment bankers tried their best to come in at a good price because they think they expected a lot more buying than actually happened. But we got to understand that Facebook's trading at, 115 times its earnings, which is an immense amount of optimism for the future of Facebook. So even now, the Facebook price is immensely inflated unless they can catch up. So once you see them start to monetize Instagram and even more aggressively monetize Facebook, and as long as they can keep their user base, they could potentially reach those levels. But right now, the price that Facebook has fundamentally isn't warranted. It's still optimism.
And one stock right now then where we are seeing an opportunity.
I think we should be definitely looking at Netflix. I can't guarantee that the stock will increase, but I think...
I suppose no one can. We don't expect you to do that.
I think it's just becoming the next straight-to-DVD box for which used to be the purview of gas stations and blockbusters everywhere. It's now Netflix is taking that over, and now that they're getting exclusive content, I think we'll see some really impressive performance from them in the next couple of quarters.